The Nightly Business Report.
Good evening. Tonight, according to central bank data, since the government implemented the cost recovery mechanism in August 2022, Sri Lanka's energy rates have remained about 96% high on average. With around 44,000 visitors in early June, Sri Lanka's tourism industry experienced rapid expansion. Nevertheless, it is currently uncertain since Middle East conflicts jeopardize international aviation. On the first trading day of the week, the S&P SL20 and the All-Share Price Index both entered the day lower, causing the Colombo Stock Exchange to close lower. And amid continued tensions between Iran and Israel and apprehension ahead of multiple significant central bank meetings this week, Asian stock markets stayed mostly steady. Good evening and thank you for joining us. Sri Lanka's electricity tariffs remain nearly 96% higher on average since the government introduced the cost recovery mechanism in August 2022, according to central bank data. This significant increase reflects ongoing efforts to balance energy costs and supply amid economic challenges.
Sri Lanka's electricity tariffs have increased by 95.5% since August of 2022, following a recent 15% hike after 3 consecutive reductions, according to the Central Bank's Department of Economic Research. Since the cost recovery mechanism began, electricity prices have seen multiple revisions, including significant increases and reductions between 2022 and 2025. The cost of consuming 90 kilowatt-hours monthly has decreased slightly by 80 rupees to 1,720 rupees as of the June revision. The Public Utilities Commission of Sri Lanka reported that the Ceylon Electricity Board incurred a financial loss of 18.4 billion rupees from January to March of this year. To address this, CEB's tariff proposal includes a negative revenue adjustment of 8.2 billion rupees for June to December of this year. The board forecasts electricity sales of 9,329 gigawatt-hours during this period, with expected revenue of 230.7 billion rupees. These adjustments reflect ongoing efforts to manage the financial sustainability of Sri Lanka's power sector amid fluctuating demand and costs.
President Anurakumara Dissanayake met with IMF Deputy Managing Director Geetha Gopinath and her delegation at the Presidential Secretariat today. During the meeting, the President expressed gratitude for the IMF's ongoing support amid Sri Lanka's financial crisis and raised concern about recent US tariff affecting 25% of the country's exports. He also discussed challenges from global conflicts and highlighted efforts to mitigate related risks. The discussion covered Sri Lanka's trade ties with the EU, particularly the GSP Plus concession, which benefits 23% of exports, and the government's focus on boosting investor confidence for economic recovery. Ms. Gopinath praised Sri Lanka's progress over the past 2 years, including governance reforms and economic growth. The IMF delegation reaffirmed its commitment to supporting Sri Lanka's reform and recovery efforts. Sri Lanka's tourism sector saw strong growth in early June with nearly 44,000 visitors, but now faces uncertainty as Middle East tensions threaten global aviation.
Sri Lanka's tourism sector experienced strong growth in early June, welcoming 43,962 visitors, a 31.6% increase from the same period last year. However, escalating conflict between Israel and Iran has turned regional airspace into a conflict zone, causing major flights rerouting and soaring fuel costs. Several Middle Eastern countries have closed their airspace indefinitely, disrupting key air routes between Europe and Asia used by airlines including Sri Lankan Airlines. This has led to longer, costlier flights that may deter travelers and impact tourism arrivals from important markets like UK and Germany. The UK and Germany remain Sri Lanka's top visitor sources, making any travel hesitancy from these countries a serious concern. Additionally, rising fuel prices are increasing operational costs for hotels and transport, threatening Sri Lanka's tourism competitiveness. The conflict also risks reducing arrivals from Israel, another consistent tourism source.
Credit to Sri Lanka's private sector continued to grow in April, increasing by 87 billion rupees despite seasonal slowdowns due to year on holidays. The total outstanding credit from the licensed commercial banks reached 8,501 billion rupees by month end, with year-on-year growth accelerating to 15.2% from 13.8% in March. Banks extended 361.6 billion rupees in new credit during the first 4 months of 2025, supported by low interest rates that have made borrowing more affordable. The central bank noted a crowding in effect, with the credit shifting toward the private sector as government borrowing needs decrease. Credit expansion was broad-based, benefiting sectors like agriculture, industry services and personal loans. The central bank also cut its key policy rates in May, further easing borrowing costs and expected to sustain credit growth. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange closed in the red on the first trading day of the week, with both the share price index and the S&P SL 20 ending in losses. The negative start follows a turbulent week for the market, reflecting ongoing investor uncertainty. For further insights, we speak with Akna Tenakorn from First Capital Holdings.
Thank you, Prasansa. The Colombo Stock Exchange opened the week on a rather lukewarm footing. The ASPI dropped below the 17,100 mark during the early hours of today's session, but showed consistent recovery across the day, ultimately ending at 17,360. This, however, is about 67 points lower than the closing level of the previous session. HNB, Commercial Bank, LOLC, Haley's and Ceylon Tobacco Company emerged as the top negative contributors to the ASPI. Today's turnover stood at 3.1 billion rupees, lower than the last session's turnover of 3.9 billion rupees. This level also falls significantly short compared to the average monthly turnover, which hovers close to the 5 billion mark. In terms of sector-wise contribution to turnover, the diversified financial sector took the lead with a share of about 21%. This was followed by the capital goods sector and the banking sector, which produced a joint contribution of about 34%. Thank you.
The Colombo Stock Exchange bourse experienced significant ups and downs last week, closing in the red on the first trading day of this week. Stay tuned for further insights on how the market performs in the days ahead. Now we speak with Shahana Kanagaratnam from First Capital Holdings.
Thank you, Prashansa. The Colombo Stock Exchange has demonstrated strong upward momentum in recent weeks, supported by elevated turnover and sustained trading volumes. However, the current week commenced on a subdued note, with the ASPI declining by 67 points to close at 17,360 with a turnover of Rs 3.1 billion. Market sentiment this week is expected to be shaped primarily by global geopolitical developments, particularly the intensification of tensions in the Middle East. The potential implications of this escalation may introduce volatility and weigh on investor confidence. On this backdrop, daily turnover is projected to be around Rs 2 to 3 billion over the continuing sessions. Domestically, the recent implementation of higher electricity tariffs has triggered mild profit-taking as investors reassess near-term cost pressures and potential implications for corporate earnings. On a more constructive note, ongoing discussions with the IMF remain a key focus. Market participants are closely monitoring the progress of the fourth review under Sri Lanka's extended fund facility, with a potentially favorable outcome likely to reinforce macroeconomic confidence. Retail investor participation is expected to remain resilient, supported by selective interest from high-net-worth individuals. Sector-wise, activity is anticipated to be concentrated in diversified conglomerates, banking and diversified financials. Thank you.
Gold prices dipped slightly in Asian trading today, pressured by a stronger dollar. though the metal remained on solid gains fueled by escalating tensions between Israel and Iran. Spot gold fell 0.1% to $3,427.78 an ounce, while August gold futures declined 0.2% to $3,446.45 per ounce. The slight pullback followed nearly a 4% surge last week, driven by safe haven demand after Israel strikes on key Iranian targets, including Tehran's nuclear facilities. Iran's fear retaliation with missile attacks on major Israeli cities, including Tel Aviv, further heightened geopolitical risks. Some Iranian missiles reportedly penetrated Israel's Iron Dome defense system, adding to market uncertainty. Meanwhile, a resilient US dollar ahead of the Federal Reserve meeting also weighed on gold prices. Oil prices dipped slightly today after surging 7% on Friday, as recent military strikes between Israel and Iran did not impact oil production or export facilities. Brent futures fell 0.8% to $73.65 per barrel, while US WTI futures declined 0.7% to $72.47 per barrel. Both benchmarks initially jumped over $4 per barrel during Asian trade before retreating some gains. The strong rally on Friday marked their highest levels since January, with prices rising more than 13% in a single session. Iran, a key OPEC member, produces around 3.3 million barrels per day and exports over 2 million BPD of oil and fuel. Analysts note that OPEC Plus spare capacity is roughly equivalent to Iran's output, helping to offset potential supply disruptions. The Sri Lankan rupee has depreciated slightly against the US dollar today, compared to last Friday. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have increased. Let's take a closer look at how the Sri Lankan rupee is performing today against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. ASUS has unveiled its all-new Expert series in Colombo, introducing high-performance laptops and desktops aimed at boosting productivity, security and efficiency for professionals and small businesses.
ASUS has launched its new Expert series in Colombo, targeting professionals and small businesses with AI-powered performance and enterprise-grade reliability. The portfolio includes the versatile ExpertBook P series and the compact yet powerful Expert Center P500 mini tower. Leading the lineup is the ExpertBook P5, ASUS's first Copilot Plus PC for work, powered by the latest Intel Core Ultra processor and enhanced with ASUS AI Expert Meet. The P5 features a sleek aluminium chassis and a 2.5K 144Hz display for immersive visuals. The ExpertBook P3 offers up to a 13th-gen Intel Core i7 processor and dual SSD support for expanded storage. For everyday use, the stylish and lightweight ExpertBook P1 combines a fresh design with fast performance. The Expert Center P500 mini tower stands out with superior cooling and up to 30% better peak performance than rivals in its class.
Seat Kalini Holdings has partnered with Gamma Pizza Craft Lanka, the franchisee for Pizza Hut and Taco Bell in Sri Lanka, to support around 800 delivery riders with special tire discounts. This collaboration aims to promote safer and more efficient travel for Pizza Hut's registered delivery riders across the country. Riders can access discounted motorcycle and scooter tires at over 600 authorized Seat dealers and partner outlets island-wide. SIAT emphasizes safety, reliability and cost efficiency as key benefits of their products for riders. Gamma Pizzacraft Lanka highlights rider safety as essential to maintaining timely and reliable deliveries. SIAT Kalani Holdings is the leading tyre manufacturer in Sri Lanka, contributing significantly to the local economy by reducing dependence on imported tyres. Mawathe Mandire hosted the grand launch of the global luxury bus giant Yutong at the Hilton Grand Ballroom in Sri Lanka. The event showcased Yutong's cutting-edge technology and premium comfort features from the Sri Lankan market.
Global luxury bus brand Yutong was officially launched in Sri Lanka at the Grand Mawathe Mandire event held at the Hilton Grand Ballroom. The event marked Yutong's entry into the local market, showcasing its premium buses and advanced transport solutions. Hosted by exclusive local partner NCG Speed Holdings, the launch featured an opulent display of ultra-luxury buses and immersive virtual reality test drive experiences. Industry leaders and stakeholders attended the elegant cocktail event, signaling strong interest in transforming Sri Lanka's transport landscape. Mawathe Mandire is the vision of NCG Speed chairman Nikita Guerrero, aimed at redefining the standard of bus travel, service and maintenance in the country. The initiative is expected to elevate the entire transportation ecosystem, including the public sector. With Yutong's entry, Sri Lanka moves closer to a modern, efficient and luxurious bus travel experience.
David Perry's Motor Company has opened its first Bajaj three-wheeler dealership outside Colombo in Ambilipitia, marking the return of vehicle imports after a 5-year pause. This expansion aims to improve access to affordable mobility solutions, especially for rural communities. The new Bajaj three-wheelers feature advanced EFI engines, comply with BS6 emission standards and offer enhanced fuel efficiency and comfort. These vehicles play a vital role in Sri Lanka's transportation network, serving as last-mile connectivity and supporting small businesses. Bajaj three-wheelers also contribute significantly to the local economy by enabling self-employment and entrepreneurship. DPMC plans to open more dealerships nationwide to further support mobility and economic growth. Zesta Tea, the flagship brand under Sunshine Consumer Lanka, took center stage once more as it premiered its much-anticipated campaign, which kicks off today. The event welcomed an intimate audience comprising creators, collaborators and long-standing stakeholders who gathered to celebrate the return of a name synonymous with memorable storytelling.
Reflecting on the evolution of Zesta, Kavi Rajapaksha, the Chief Marketing Officer at Sunshine Consumer Lanka Limited, shared that Zesta has always represented more than just a cup of tea, and their campaigns have left lasting impressions because they capture life's small yet meaningful moments. Zesta unveiled its new campaign that marks a bold return to its storytelling roots, thoughtfully brewing familiar elements into a fresh and emotionally resonant narrative. Samadhi Tennakon, the Senior Brand Manager for Zesta at Sunshine Consumer Lanka Limited, commented that this campaign is a celebration of the journey Zesta has taken and a reflection of how far they have come, while inviting audiences to be part of where they go next. Following the success of the My Zesta Story campaign, which invited tea lovers across the country to share their creative interpretations of what Zesta means to them, the brand witnessed an inspiring response of creativity from aspiring storytellers. Zesta has evolved to championing user-generated content, becoming one of the most recognizable names in Sri Lanka's tea landscape. The campaign is not only a tribute to where the brand has been, but also a clear sign of where it's headed.
DFCC Bank has launched a 100% funded global education loan program in partnership with ACH Education to support Sri Lankan students pursuing studies abroad. The initiative offers up to 10 million rupees in financing, covering tuition, accommodation, travel and other essential expenses. Students benefit from a grace period of up to 4 years, allowing them to complete their studies before beginning repayments. The program also includes expert guidance from ACH Education, assisting students with applications, visas and pre-departure processes. DFCC Bank aims to break financial barriers and expand access to international education for aspiring students. This initiative is set to create a more globally connected and skilled Sri Lankan workforce. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stock markets remained largely flat amid ongoing tensions between Iran and Israel and caution ahead of several major central bank meetings this week. China CSI 300 and Shanghai Composite indexes moved less than 0.1%, while Hong Kong's Hang Seng dipped 0.2% after weaker than expected industrial production data. Japan's Nikkei 2025 outperformed, rising 1%, with the topics gaining 0.6%. South Korea's Kospi climbed 0.7%, nearing a 3.5-year high following political optimism. In Australia, the ASX 200 edged up 0.1%, boosted by a more than 10% jump in Santos Limited after a $18.7 billion takeover offer. India's Nifty 50 futures rose 0.2%, signalling a positive start to the trading day. Renault's CEO Luca De Meo is leaving the French carmaker to purchase a role outside the auto industry, the company said, and newspaper Le Figaro reported he would become the new chief executive of Gucci owner Kering.
He's credited with turning around Renault, but now Luca De Meo is making his exit from the French carmaker. Renault confirmed the news Sunday, saying he would be gone by mid-July. Later, France's Le Figaro newspaper said that De Meo was set to take over as chief executive of luxury group Kering, the owner of Gucci and other big brands. He will reportedly replace François-Henri Pinault, whose family controls the firm. Kering declined to comment on the report, but the move would come as the company faces pressure to deliver a turnaround, as it grapples with high debts and flagging sales. De Meo joined Renault in 2020, a year when it reported record losses. In the years since, he has cut jobs, costs and production capacity, making the company smaller but nimbler. He also oversaw the launch of strong-selling new cars, including a reinvention of the Model 5 hatchback. Of late, the firm has also been boosted by its focus on the European market, which leaves it well insulated from Donald Trump's sweeping global tariffs. Its shares are up around 90% over the period of De Meo's leadership. He also oversaw a reshaping of Renault's long-standing but often troubled relationship with Nissan. On Monday, the Nikkei newspaper said the Japanese firm planned to further reduce its stake in its French partner. The sale is expected to raise over $600 million, which Nissan will invest in developing new vehicles.
That wraps up today's Nightly Business Report. We value your opinion. Share your thoughts and feedback with us through email at feedback.ad24english@derana.lk or via WhatsApp at 07680577933. We will see you again tomorrow with the latest updates in the business globe. Until then, I'm Prashansa Gunawardana. Thank you for watching and have a good night.